It's about that time of day again. My name is Joseph. It's Monday evening, June 19th. Welcome back to your nightly newsletter. Tonight we're covering crude, S&P, gold, euro, and DAX this evening. Crude is bearish and two legs down tonight, which tells us to avoid chasing this move lower and wait for a bullish correction to sell more tomorrow. S&P's bullish with a spike in channel, and we're watching the prior week high as a major psychological level for the buyers going to buy dips tomorrow. Gold is bearish with a parabolic move lower, very strong to the downside today on the yellow metal. That tells us it's a great time to bank some profit and wait for a two-legged correction back to those highs for tomorrow. Euro's bearish with a spike in channel tonight, but we're getting a little too close to last week's low, so the plan is to look for selling opportunities up in the battle zone tomorrow. The DAX is bullish with a spike in wedge, so the plan is to look for buying opportunities below support levels with a measured move target waiting overhead. We're back in the action today after a Father's Day weekend, rested, refocused, ready to kick the tar out of this fourth week of the month of June. Hope you guys had a great weekend. Hope you had a great Monday out there so far. Getting ready for Tuesday's session. Got a great plan of attack here for you guys and gals. Before we jump into our charts, though, I do want to remind you, the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of that YouTube video. Follow that link and come join me here on the blog at Sideways Markets for the full-length version. While you're here, don't forget to join the mailing list. Never miss another newsletter. Give me your name and your email address, and I'll shoot you an email every evening when this nightly newsletter goes live. Follow me on my many different social media channels, lower left-hand corner, Twitter, StockTwits, Facebook, LinkedIn, right? Whatever flavor you like the most, grab me up on social media. I'm always posting important charts, links, and updates there. Don't forget to grab those charts. How easy is that? All the charts from tonight's video, have them ready on your computer for tomorrow by downloading the charts with that link below the video tonight on the blog. And please don't forget to grab your free pass. That's right. If you're not an advanced member here at School of Trade, you got to grab that free pass. You'll learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can guarantee you that. Also, please don't forget, we got a great frequently asked questions page, and I'm always here to answer all your inquiries. Hit me up on live support on the right-hand side of the website and on the blog. I'm always standing by. Help you guys out 24/7. Hope you guys had a great weekend out there. Big week ahead of us here. Kind of a wide open news week as we jump into the calendar here for this week. It's a pretty wide open news week. As you'll see, there really isn't a lot of major news here as we go into this fourth week of the month of June. It's almost like that fourth week here is going to be a little bit forgotten here as we come out of quadruple witching. So back in the action here this week. Not a lot of major news tomorrow. On the 20th, you can see there's pretty much nothing to worry about tomorrow on the 20th. The big news will be coming on Wednesday, of course, existing home sales and the petroleum status report inventories on Wednesday morning. Other than that, though, that's up until Friday morning, new home sales, PMI composite. Is really not a lot of major news on the calendar, which is great because coming out of last week's quad witching, we're definitely looking for a clean, wide open week ahead of us. So tomorrow, the 20th, not much on the calendar here for tomorrow. We get some news tomorrow night from the BOJ at 7:50 p.m. Eastern time, but that's about it. Nothing tonight, overnight. Nothing on the calendar tomorrow, right, coming out of London in the U.S. session. And don't forget, we're going to be in our trade room tomorrow morning at 8 o'clock Eastern time executing this plan. I hope to see you guys there right along with me. Let's jump right in. We got crude, S&P, gold, euro, and I can't forget about that. We've got crazy animal, the FDAX tonight. We'll wrap up for all the FDAX traders. Crude is bearish after collapsing off today's high and sitting on the prior month low. The chart shows us that sellers broke free of the channel and are two legs down, which tells me that this will likely be seen as a great place to take profit, and sellers will wait for a better price to sell more tomorrow. The plan is to look for selling opportunities up inside that battle zone using buyer failures or a two-legged correction for a target going back down to retest the low. The most important thing, there are two real big important things in this chart right now. The first thing obviously is this prior month low. It didn't take very long to go back to May's lows, but here we are staring that $44 a barrel number right down. So prior month low is a big deal here. We can tell we've kind of exhausted the bulls again, and we're kind of sitting back down at that low. Anytime I find myself at a prior month low or a prior week low, I always expect this to be a great spot for long-term traders to bank some profit and to expect a short covering rally. Now, with that said, how far that short covering rally will go, it may not be very far, right? Because you can see here today, the bears were out in full force. Second thing that stands out on this chart is the fact that we started off the afternoon here with a strong bear channel, and you'll notice the bears broke free of that channel. They retested the low once, pulled back, and did it again. This is my definition of two legs down. What is interesting about this two legs down is that none of this pulled back to retest the moving average at all. What that tells me is that conservative traders are probably still waiting to get their hands on this market to sell it back down again. Unless you're willing to be relatively aggressive here in the afternoon session, right, you probably were sitting on the sidelines waiting for moves back to the moving average or back to prior levels of resistance. So when you combine this all together, we have the prior month low, excellent spot for longer term traders to bank some profit, expecting to see a correction. At the same time, seeing the market go one leg and two legs down. Whenever I see a market two legs down, it's like being three, or should I say four, measured moves lower, right? As you can see here, big moves down, excellent spot here for sellers to bank some profit and wait for price to rise higher so they can sell more tomorrow. Now, really the goal is to get this price up off the low, up into the battle zone, and then grab it as it's coming back down. The objective, of course, being back down at that low. If it doesn't correct higher, we then expect to see price running lower. There's that $44 a barrel, but we're not going to want to chase after it. We're going to want to make sure we look for those traps, right, and short-term corrections to make sure we don't chase after that move lower. Sitting at the prior month low, two legs down, I really don't have a lot of interest in trading it as it goes lower. I'll wait for it to go lower, show me some proof that these sellers really want this, and then we'll go looking to sell high up off that low. In other words, if price goes lower, I want to make sure I continue to sell high, but I need to see the price go lower first so I can get that relative comparison to it and get a good shot to sell it back down again. So that's the plan here, either up and back down or down and back up. Let's dig into those two scenarios here a little bit deeper. Now, first of all, as this market goes up, we may see this market turn short-term bullish. So if you're trading the overnight Asian, the London session tomorrow morning, into the first part of the U.S. session tomorrow at 8 o'clock Eastern time, we may be seeing this strong move off the low, and you might be able to get some great buying opportunities. For all I know, tomorrow morning, we may be spending the initial part of the morning as a buyers tomorrow before this market kind of rolls over, right, and we turn to sellers on the opposite side. So it really all depends on how far this market wants to correct, and then when that turn happens on the way back down. First of all, the most important thing to be keeping in mind right now for the sell side are going to be traps and failures. Now, it's a little bit difficult to say a trap here, but this is where you'd be spending a trap, where it'd be trap high up above that high. That'd be the most aggressive. More reliable sell, though, would be a failure back above that moving average. Up, buyers can't hold, right? Buyer failure, back down below the moving average. A little bit more dramatic will be a two-legged correction. Price becomes bullish in the short term, trend line breaks below, sell back down using that trend line as resistance. So three scenarios there. Again, trap above that little range I've drawn in there, trap high, buyer failure above the moving average, or again, keep an eye out for that possible two-legged correction. Price goes up, forms that trend line, break, pull back, go, use the trend line as resistance up inside, right, that battle zone, up inside, right, those levels of resistance. Now, how does this market turn bullish? What would give you the green light here, right, to be buying this in the short term? First thing, strength. Strong move up off the low. We have to see the bears taking some profit. Then we want this to turn from a short covering rally, right, from profit taking into a bull market, and that would be new higher high and then holding a pullback above that moving average. I don't care what direction I trade in. long-term trend is bearish, but we could easily have a short-term trend that's bullish tomorrow. So keep an eye on that, especially when we see a market that just took a nosedive like this. Again, if I'm long from 3 or 4 weeks ago, right, off that last big correction, this is a great spot to be taking some profit, right? So don't be surprised if we do see, right, a short covering rally back up to this falling resistance overhead, and maybe even a possible run right back to that big round number at 45 even. Now, what if this price goes lower? That'll be the tricky part. We have to assume the objective is going to be that big round number, at least off the top of our heads. Once we know more about the situation tomorrow, we can formulate some channels, some measured moves, some double ups and double downs to find some better targets. I think the most important thing right now, though, is where we are. We're at a major objective. We're 2 legs down. We're at the prior month low. Again, I want this thing up so I can either, again, short-term buying, right, long-term selling back down. If it does run lower, watch for a situation where this may end up becoming somewhat like a spike in channel. It's kind of the way it kind of looks right now. Moral of the story is be very, very careful this market dumps lower. I don't want to be selling low like this. I understand in the past, right, those breakouts made you money, but that's not going to happen every time. It's not a very reliable trade. In liquid markets, breakouts historically have a very low winning probability. So my goal for tomorrow is, rather than trying to sell it as it goes lower, show me some proof, right? I'll gladly wait patiently, let those bears take the price lower. Then once we know we have, for example, the moving average coming down below that prior month low, then we know we have enough proof. Then we can look for that little trap high, right, trying to sell high. Whenever I find myself in a position, you're going to hear me say this quite a bit, whenever we reach the objective, okay, sellers are always selling until they reach their objective. Right now, we assume the objective is that prior month low, right? As those sellers now start getting out of positions, if this market keeps going lower, I don't want to chase after it, right? I want to see proof so I can then sell high after seeing that proof. Whenever I find myself in a position where the only option is to sell low, I'll wait and then trap high. Trap high as price goes lower. We'll see some examples in a few moments on markets like the DAX and the S&P 500, which are now bullish, right? And we'll look for trap lows. But markets like crude oil, gold, and euro tonight, we're really looking for traps as the market goes lower. Again, I would much rather see it go up so we can then grab it on the way back down. And again, don't be surprised if we do see a short-term bull market tomorrow. Short-term, right, bullish. Long-term bearish happens all the time, right? We saw that example this morning in the trade room. We got this morning in the trade room, right? We're looking at this as a spike in range, and we're looking bullish here, right, for most of the morning until the buyers failed to retest that high, and then, of course, it dumped back down. Long-term sellers are selling into it. That doesn't mean, though, you can't make money in the short term here being a buyer to the upside while the buyers have control. So again, right now we're short-term bearish and long-term bearish, but watch that move back above the moving average, hold that pullback for a chance to be a buyer tomorrow before it makes a turn back down again. It's all coming together tomorrow morning. We'll be in our trade room tomorrow morning, 8 o'clock Eastern time. I hope to see you guys there, and we'll execute that plan tomorrow together. How about some S&P? S&P is bullish with a spike in channel, which tells me the most reliable buying opportunities will come after a two-legged pullback to support levels down in the battle zone tomorrow. Now, one thing that stands out on this chart is that prior month high. We talked about the prior month low on crude oil. Well, look at the prior month high. Yeah, exactly what prior month high? It was almost ignored today. It was almost as if nobody even cared about it, right? It was never really used today. So I assume that buyers will use that as a psychological level to justify buying more if they get that pullback tomorrow. This is about as easy as it gets. Strong move up. I call that a spike because it doesn't pull back to the moving average. Anytime we have a strong move in one direction that never pulls back to the moving average, it's very likely that everybody's waiting for the pullback, and a lot of buyers here were probably waiting, right, pretty long for that pullback. As you can see, it didn't come, right, until late morning, right, early lunch. And of course, that pullback went back and retested the high, right, made a new high, and that creates that spike in channel. So that's a pretty easy move, right? Spike up. Obviously, that strong spike up tells all the buyers, get in, buy whatever you can, right? First pullback is successful. Second pullback is successful. as you can tell, as we go over this, everybody's in long. And that's one of the key characteristics, the key psychological traits of a spike in channel. We're going to see another one of these on the euro and, of course, the FDAX here today. Whenever I see a spike in channel, the very first thing I think of is look at those prior swings and wait for price to come back so we can buy a nice deep pullback, right? Hope you guys are learning a lot and earning a lot with all this information in the nightly newsletter. I do want to remind you, if you want to learn more about the trading strategies that we use every day in our trade room, please don't forget to join our free trial at schooloftrade.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link. Join me here on the website at School of Trade. Grab that free trial. Learn more about our 3 levels of membership. And don't forget, I'm always here to answer your questions. I know that most websites are automated robots these days, but I really appreciate your time. I will answer the phone. I will answer live support, right? And I will respond back to your emails to jj@schooloftrade.com. Guys and gals, once again, happy Father's Day to all the dads out there. Hope you guys have a great Father's Day. We're back in the action for a big, big week ahead of us. We have a ton of big opportunities setting up for tomorrow's session. You get the plan. Now follow that plan, right? Plan your trades and trade your plan tomorrow. I'll see you guys tomorrow at 8 o'clock Eastern time. If not, same time, same place tomorrow night in the newsletter. You got it. Adios, amigos.